Hey everybody, it's Mark Pruitt. Hope this video finds you well. From Strategic Estate Planning Services, we've got some information today that you're going to find very interesting in regards to the question that I've been getting a lot is, and get often, is my money safe in a bank or in a security account? And those are two different answers, and it depends on whether you're single, whether you are married, and how much you have in those particular accounts. So let's go over that real quick. Let's take first if you're single. If you are single, and let's say in that particular bank account, the bank, you have 4 different accounts in there. And all 4 of those accounts, whether it's IRA, Roth, regular money, stocks, bonds, those type of accounts, and your accounts totaled combined of say $300,000 in all of those accounts combined. How much are you protected if you're single? The answer is up to $250,000. So $250,000 of FDIC protection, $500,000 of it would not, $50,000 of it would not be, which the 250 and the 50 equal your 300. So that's important to know. Now, what are something that you can do? Well, one of the things you can do is if you have a security account, securities give you through SIPC, SIPC, gives you up to $500,000 of protection. Now, not cash. Cash is still only $250, just like it is in a bank. But if you have securities of any kind, even short-term treasuries that have not near the risk, that they still have risk, but not near the risk that, stocks and bonds, as an example, or ETFs could have. You're looking for $500,000 of protection if they are in some type of security. And so that's double what cash does in a bank. So that's something to keep in mind. So you could technically have $250,000 in a bank, be protected, $500,000 of securities in a security account, and you could be protected. And then it's also per bank, as in Wells Fargo, up to $250,000. Bank of America up to $250,000, Chase up to $250,000, security accounts, Fidelity up to $500,000, TD Ameritrade up to $500,000. So keep that in mind in regards to protection. Now, if you're married, you have a little bit more that you can do. And people ask me all the time, they say, Mark, can I, if my husband and I have a account and we've got $600,000 in that bank account, how much is protected? Is it just the $250,000? And the answer is if you are both joint owners on the account, that means they've got both of your names and they've got both of your social security numbers. And so if you've got $600,000 in there, you actually have $250,000 for one spouse and $250,000 of protection for the other spouse. So that's $500,000 total. So how much would be protected? $500,000. The other $100,000 would not be protected by FDIC. Now the same thing though was with security accounts. We were talking about that with singles, but you can get up to $500,000 of protection per person if you're in a joint account. That makes a big difference. That's $1 million right there. So it makes a big difference So if you've got a security account and you've got a Roth and an IRA and an inherited IRA and you've got some regular money, you as an individual on your IRAs, you have up to $500,000 if they're in securities of some type. If you are the spouse, you have the same thing. So $1 million in regards to SIPC protection. So these things are real important to make sure that people understand. A lot of people don't talk about it. A lot of advisors don't talk about it. I won't say none of them do, but a lot of them don't. And honestly, I see banks that really don't talk a lot about it. So you can go to the FDIC site, which we're providing the link to be able to, you can actually pull that information off, look at it and read it, and it will clearly give you the information that you need to know in regards to protection. So protection is the biggest thing I'm hearing right now. I can tell you, Janet Yellen has already mentioned, has already said that they are willing to backstop, and I'm using her words, they're willing to backstop more banks as they are needed to be backstopped I'm going to change the word and say backstop to me means they're going to help support or bail financially those institutions if need be. We don't know what the size of that is, what the limit of that is, but she has sent a signal basically, and the article bears that out, saying that she's willing to do that as needed going forward to get through any of the banking issues that they're having. So that's something to keep in mind. I can tell you now, this is my opinion. I will tell you that from watching and hearing and listening, I'm seeing that if you've got money in Bank of America, you got money in Chase, you got money in Wells Fargo, those are three of the largest banks in the nation. There's never a guarantee of what the government will or will not backstop or support, but I can tell you that the larger banks, you know, you've heard the motto in the past saying they're too big to fail. I can't say they're too big to fail, but I can say they're the largest ones in the nation. And if anything's going to be backstopped, that's probably one of the ones that would be backstopped. But again, no guarantees on that whatsoever, but I'm giving you some examples of the larger they are, the more the government will have a tendency to help that. Smaller banks, that is yet to be seen. I do know this, banks go out every single year. This is not something new. This is something that happens every single year. It's just when some of the larger ones begin to go out, such as the Silicon Valley Bank or Signature Bank in New York, and you see those being backstopped using Janet Yellen's words, that begins to bring to light some things that really are happening on a yearly basis anyway. It's just a little bit different this year because those were two of the bigger ones. You see Credit Suisse now that is also being bought out as well. That's another large bank as well. So I just want to bring to your attention about protection. So hopefully this has been helpful for you. I can tell you, in regards to markets, for our market update of March, that we know that there is really coming soon the first quarter profits that will be announced in April. So the first quarter of 2023, they're going to be announcing how that's going and what that is going to look like for corporations across America trying to show profits. I do know this, Amazon has announced another large layoff again. And so that when you begin to see companies that continue to lay off, not just starting to lay off, this is actually their third layoff, that begins to tell you that companies are beginning to look at how they're going to position in profits. And usually, my opinion is you only have profits two ways. People either spend money at the location and the companies gain profit, or they begin to lay people off to reduce their bottom line. And so that's something that what Amazon that we see is doing, because this is their third layoff in about 3 or 4 months that they've had. But we do see buying opportunities coming here, and we're ready to do that. We're positioned to do that. We know the Fed has approved for March already a 1/4 point interest rate hike. Whether they stick to that, whether they raise it up higher, that's yet to be seen, but I know they've approved a 1/4 point hike. I would not be shocked if they did not make another approval for April, but that is yet to be seen again. That will depend on where inflation comes in as well, and if the banking industry needs to be propped up even more so as time goes on here a little bit. So we're ready when the time is right as far as buying opportunities. We're ready to do that. As always, thank you for your confidence in us. We appreciate you being here. If you've got any questions at all, don't hesitate. Feel free to call us at 1-800-381-8870. Because when it comes to your money, it pays to be strategic. God bless and have a great week.